Hey, good afternoon, traders. Trader Tim from E-mini Mind doing a trade recap video for the week. Today's Friday, July 29th, 2016. Now that we have passed the FOMC meeting announcement, we should be able to break out of the range that we've been in for the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days. And today we broke the high of the last couple of weeks that we had bracketed, and we talked about this on Tuesday as well as in Monday's video. So now that we've been able to pierce a little bit, we'll see if we can come up to 2175 or if we just end up turning over and starting to pull back, in which case I will look for a 50% retracement. That would take us down right around the 2075 level, kind of in the middle of this somewhat congestion level. When we put a nice sideways consolidation point like this in, with a bunch of days in a very tight range, it's very helpful for creating a new support level and creating very strong lines in the sand. Even though there may not be very many opportunities within this week or two window, we didn't see a ton of great trades, but I'll talk about those trades in a second. But what it does going forward is gives us some more reference points and provides a lot of good trading opportunities when we bounce above or below these levels. So let's take a look at a 5-minute chart. We'll talk about some of the trade setups from the week. We'll start with Tuesday, where we were in live trading in the morning. There was a long above the high of the first 5-minute bar that took us up for a couple of points, and then we got taken out. Market kind of pulled back, faked out a little bit, looking like it was going to continue higher, and then rolled over. There ended up being a low of the high bar short setup that led this move down, and then we kind of went into a very strong triangle formation through the end of the day, kind of closing again right where we opened. That was the theme of the last couple of weeks. The next day, Wednesday, ended up. This is a really good example of trailing your stop, leaving your trail stop beyond the breakdown bar. So not getting overly aggressive when we have inside candles. So shorting the first 5-minute bar got us into a trade, and then the next couple of bars that we saw over here, if you can see how these 3-4 candles never break the previous candle's high, they're just inside that big body candle down. So when we have a scenario like that, we can just leave our stop above this larger body candle, so putting our stop one tick outside of that. And in doing so, that allows for us to stay in the trade. Even though we take a little bit of heat on the return on this little bit of a bounce, you can stay in the trade, and then when we do roll over, then you have a lot more upside, so to speak, potential, profit potential in the long run versus just getting out somewhere down at the first leg lower. Being a little bit more conservative with the stop. As I was talking about on Monday, going into the week, there's been a little bit of chopping back and forth every day, so being a little bit more conservative can allow you to stay in the trades a little bit longer. And then we did have the FOMC meeting announcement in the afternoon, and that's kind of resemblance with this spike down here, spike down, and then spike higher. Thursday kind of went right back to the first 30-minute range. We opened, traded lower. There was a high to low bar break, so getting long above the high of the low bar down here in the pullback. That took us up to the top of the first 30-minute range, and then we came back over, rolled over, and went back to the bottom of the first 30-minute range. One of the only scenarios where I will consider tightening my stop on an inside bar is when we get a double top pattern. So, and you can, make your own call on this, but when we have two tops like this that are exactly the same price, or a double bottom that is exactly the same price, instead of treating this big body as an inside bar, you can bring your stop up underneath that candle's low, because the double top formation could signal a trend change, versus just an inside bar where we have a big body candle, a couple candles that don't break the high or don't break the low, but the tops are not lined up exactly. So that's one of the instances where you can bring up your stop with the potential trend change occurring. And then today we got the breakout above the 69.75 that we were waiting for. Not a ton of activity in the morning that was really quality in terms of trade setups. We had a little bit of a triangle formation, and then this breakout was led with the hammer high low bar down here, but no big deal if you weren't in that move, because we've been trading range bound for the last couple of weeks, so no reason to think that Friday afternoon we're going to explode out. And we really didn't explode out, we just kind of peeked into it and then rolled over again. So when you're in these consolidation periods, the takeaway is you need to be very patient and very selective with trades that you're going to take. Maybe only taking one or two trades right off the open, and then, or in the first 30, 45 minutes, and then calling it a day, just because we can have some sort of a swing one direction, maybe from the top of the 30-minute range back down to the bottom, and then kind of peter out through the afternoon. But now that we've established this consolidation range, we should have some great trading opportunities next week. The VIX is still low. There's still some more earnings announcements and things like that that'll be coming out, a little bit of news next week. But for the most part, now that the FOMC meeting has passed, we should be in great, I guess I wouldn't say great trading territory, but we have lines in the sand, and when we break down, you should see stops being hit. When we break out, you should see either traders looking to short, or traders looking to take profits and then take the month of August off, maybe getting those last minute vacations with their families before their kids might go back to school. August is typically a very lousy trading month. There's not a ton of activity, good trade setups, a lot of big economic bodies are having a recess or a summer break, so there's no need to be overly aggressive as we go into the month of August. That being said, we will look for the best setups that we can find, and then once September rolls around, then things really start to pick up. September, October, November, usually until Thanksgiving, and then there's a little bit of a pause around the Thanksgiving holiday. And then as we get into usually the second week of December, then things really start to slow down through the end of the year. So that's where we're at in the ES. If you have questions, shoot me an email, tim@emoneymind.com. I hope you all have a great weekend, and we'll talk to you next week.